Yo, what's crack-a-lackin', my people on Crypto Hustle, YouTube, and wherever else we are streaming? What's going on? It's your boy, Deadly Crypto. Not great to the B, to the C, to the moon, but deadly to the crypto, to the deadly, to the crypto. Yeah, that's right. The king of crypto up in the house. Going to be talking to you guys today about another wonderful lesson about unlocking price action secrets. Last week, we talked about some wedges. This is going to be a continuation of that. We're going to be talking today about some more obvious structures to spot. It's going to be bull flags, bull pennants, bear pennants. So these four formations kind of look the same. They can be very similar, but we'll talk about the key differences and how you can capitalize on them today. So shout out everybody. Also, for those who stick around to the very, very end, we're going to be looking to give away a 2-week alpha pass so you can see what goes on behind the closed doors, see what's going on in the alpha group. So if you stick around to the end, you have a shot. We're going to be giving one of those away. We'll talk about that towards the end of the stream. So let me go ahead and get my screen share up for you guys, and we'll start learning. What's up, everybody? Shout out Simon. Let's get it. Join the conversation. Crypto Prosperity, Callum Johnson, Wingy Blaze, Waka Wa Big Yeti, evening from Nigeria. What's up? Wingy Blaze and Haladu. I already said Wingy, you got 2 shout outs. And Haladu Garba. Shout out all the guys here at the beginning of the stream in the comment section. All right, let's go ahead and get to it. Okay. So we took a peek at this cheat sheet last week, and we were looking more at these structures over here. So this week on this lesson, we're going to be looking at these structures. So I'm going to tell you how they come about, how you can measure them, and how you want to place your trades around them. So the flag and the pennant are very closely resembled, or have, excuse my English there, they bear a close resemblance, but we can see some key differences here. The flag will sort of come out in a parallel channel. They don't really, the ends of the trend lines will never really intersect, or they'll intersect at a very far point. The pennant, they are more aggressive in slope, and they'll intersect at a very close point. So what we're seeing here with the pennant represents a push in price. So normally from 1 to 2, we're looking at a upwards push in price. Now the push is going to need to have some cool off, and that can come in the form of a consolidation in a flag or pennant scenario. Sometimes it may just trend sideways in a scenario that doesn't present either one of these. So we don't want to force the flag to be there, and it doesn't happen all the time. But when it does happen, it gives us an opportunity to trade smarter. So the pennant represents buying and selling pressure coming to a conflict because buyers have pushed the price up. Sellers may have tried to take an over, and that's why we see that resistance there. But then buyers also step in and show that they're going to continue supporting it along a positive slope as well. So normally what happens here, what's happening is buyers show that they're trying to take control. Sellers step in, try to regain control. Buyers show they're not going to be tossed aside, that they're pushing price higher. So the sellers retract, they leave, that resistance is broken, and price pushes up higher. This is also the same philosophy behind the flag. Hopefully we're all audible here. All right, cool. Whoever says like my comment. All right, let me like your comment. I can't like it. Prefect Noduli, I like your comment. All right, so anyway, the flag is also same philosophy here. We have an upward push in price. Buyers have shown that they want to take price a certain direction. Sellers try to stop price from moving in that direction, but buyers are still showing support. Now here we have a positive slope of support. Here it's a negative slope. So buyers are still showing interest, but it's declining interest. So this is actually not a favorable bullish scenario. This is more favorable because this shows buyers are increasing their support. And while this shows here, buyers are still showing support, but their support is declining. So this actually has a likelihood, a higher probability to break to the downside than it does breaking up. But normally when we see after a bullish move is the cool off period. Buyers can't just continue to push into oblivion. So we see some consolidations or retracements. So anyway, that's what it is on the upside. And then looking at the downside here, it's the same thing, but the opposite. So we see, a downward push sellers have, we'll start with the pennant here because this is a more prominent and strong display. Sellers have pushed the price down and buyers try to show a little bit of support. Maybe they're showing interest at this level. BTC pops above 50K, comes back down to 50K. So buyers are trying to show their support there. But then sellers step in and say, nah, we're pushing this forward. We're pushing this down. And they have that, remember, it's a negative slope. So their strength is increasing as well. And we have that conflict. So one of them has to give. Now, what normally happens in this scenario, if we see, because this can kind of come from different angles, but if we see from the, upwards push to downwards push, this is the same structure. Just here we have downward push, here we have upwards push. So if we see this structure after a downwards push, that's what makes it a pennant. And that's what gives us the idea that sellers are trying to push this forward. So sometimes it will break the other way. That's just a given. That's the way the cookie crumbles. But in the majority of these situations, when it has that bearish momentum, it's going to break bearish. And you can look for things to confirm that. This works really well with the trend surf strategy, which we review a lot in the alpha group. I've gone over it so many times, and we have the session recorded there for unlimited viewing pleasure. But, you can couple these type of structures with a lot of different things. So now that we know what the basic structure looks like, we're going to go ahead and take a look at some of them in nature and see how to measure them. So what we're looking at here, if you can't see, is a bear flag. And this can happen on many different assets and time frames. Here I got Bitcoin on the daily because we're going to take a look at a couple big bear flags there. And here I have 15-minute time frame, so we could look at some other examples, 5-minute time frame, 1 hour time frame. So we can find these occurrences on many, many, many time frames. It doesn't have to be limited to one time frame. I'm just showing you these ones because these are very prominent, and I actually did on my Twitter, I used this structure. So we'll go ahead and bring up the great bear flag, I call it. I used this exact structure to call the bottom of BTC, and I was off by 10%, I think, 12%. So that's there. It's on my Twitter. And I used simple TA. People say TA doesn't work. It does work. I'll show you exactly how it works. So this is the structure we're looking at. Can you see the flag here? So we're looking at boom, bada bing, flag pole, flag, and then we're expecting a bearish break. So I'll bring that back over here for you. It would be this is what we're looking at now. We're trying to look at these four today because they're also close. I didn't want to do flags without pennants or pennants without flags. So we're looking at these four today. And right now we're looking at this particular situation. So we're going to be measuring from 1 to 2. And then we're measuring also from the break. So our first measurement comes from 1 to 2, which is the high point to the low point. And if it's going to be a bull flag, then we're going to be measuring the opposite. So if it's a bull flag, we're measuring low point to high point. But looking at the bear flag, so we'll keep it on the bear flag for now. We have a distance, right? It's going to be X. And then we have a percentage. It's going to be Y. So the amount of time it took for this flag to form is the distance. That's X. We're looking at 75 bars. And the percentage that price fell while this was forming, the flagpole of this structure, was minus 52%. So we could measure the X, the distance, and the Y, the percent, and reasonably foreshadow. We don't know where the break is going to occur. The break could have occurred, back here, and we would have to measure from there. But in this instance, the break occurs right here. So where the break comes from, that's where we have to measure. So once we get the break, then we can protrude those same projections, X and Y, in order to give ourselves a projection of where price is going to stray. So price can do any whipty-wopty while it's in here, hooty-da. But what we're saying is, over the next 75 days, since price decreased 52%, we're expecting it to decrease another 52% over the next 75 days, because that's what just happened. And we're using that analysis based on the flag break. And then I'll just go ahead and exit out of this. I'm not going to go candle by candle because I don't know how long that's going to take. But I'll just go back over there and we'll see, it came to fruition. So we're looking at if price fills the percentage or if price fills the timeline. So price can do any number of those wopty woolies. Like I told you, it can come down here And it might not ever reach that low. It might just travel out of the time frame. So then it would expire. So at that point, we're no longer expecting it to go down because it's invalidated our previous projection. So in this case, we did see it fill all the way. If it goes outside of your time range, or if it comes back outside like this and it breaks here before it fills out of your time expiration, it's also expired based on percentage. Here we see a satisfactory, excuse my English. We see the percentage filled satisfactory. So here, that projection came to fruition. Now, how would we set up our trade in this scenario? Okay, so to trade with the trend, we want to look for shorts. So if you were here last week, you know that we're looking to short from the top and long from the bottom. Now, in a short environment like this setup we have here, we're going to want to try and place our risk to reward ratio, our trade, somewhere in this area. Okay, so this area is formed simply by the highs of price action. That line didn't come from anywhere, right? Where does this line stem from? So that line came from here. I'm connecting highs. And even when we're in that price, even when we're in that moment, we're always trying to connect highs and lows to see what our ranges are. So right there, we have a high and a low. So we have projections already based on this point. And then I'm just taking them, cloning them, and moving it inside to a reasonable range. This is continuing from last week's lesson. So this is a series. You'll understand that if you watch. You need to go back and watch last week's lesson as well. So that's what we're looking to do. And then the same thing on the bottom. But in any case, I've already executed that part because we see the structure there. So even at that point, even with just two touches, we have a projection of where there may be resistance and support in the future. There's going to be support. There's going to be resistance. We want to look to short from here. So going back into our philosophy, this is where we want to take shorts from because we never know what's going to happen. Clearly, we're looking back in time now, and I'm showing you this in a teaching environment. But in the moment, we never know what's going to happen, if it's going to break positive or negative. So we want to try and have our entries for shorts. And this is the best entry range here. This is ideal prime entry number one. We want to get our short at the top of that structure with our stop loss just above it. And then we can have our take profit to any of these highs or lows within the structure and obviously towards the bottom of the structure itself. So this way, when price comes into this area and it actually does break out, you have the most room for profitability. So we could see here that if you did get in at the right time based on that structure, you could have pulled this into a huge profitability instead of looking at delayed entry, which is your second best option for shorting, is actually taking the breakout. So then we want to have our entry somewhere right at the breakout. So as it's occurring now, let me just go ahead and get rid of that squiggly paint line so we could look at reality. So when it's actually breaking down, you want to try and have your price, your entry right there at the breakout, because sometimes it's going to be an aggressive breakout like this and there's no retest, or you may want to try and wait for a retest. But the basic philosophy here is you want to try and get your entry right at the breakout range for shorts. Okay, you want to, your best entry is going to be back up here wherever this happens. So like right here in this example, it entered that range right there. So using this projection, we still don't know where it's going to break. Initially, this risk to reward ratio is going to look like this because we don't know if it's going to bounce up and come back. We might have to close that trade. But the thing is, when you get in on that short and it finally breaks out, then you ride it down to the breakout projection. You make a projection. Otherwise, you get into this scenario and then you still go to the end of that, and it's not bad. It's not a bad trade. This one's 62%, and this one here, we're looking at this one, is 51%. That's still a lot of money. That's still a whole lot of money. Yeah. But, every flag is going to be different. Some of them might be 5%. Some of them might be 0.5%. Some of them not always going to be 50%. This is just a really good example that I wanted to show you so you know how to set up your trades. All right. So prime entry number one, shorting from the top before the structure breaks. Secondary entry when the structure breaks. Shorting. Again, going with the trend. Now, another thing we can do is long the support. So anytime we see that, like I said, in some scenarios, you not want to do this because this percentage is going to be smaller. I'm just showing you the possibilities of how we're setting up our trades around these structures. So if we're longing from here, you want to use it's opposite. The take profit is going to be the top of the structure. Entry range is going to be right here. And then your stop loss is going to be right outside of that range. So wherever you do end up getting in, if it was here, we only had this range based on those 2 points. So if we tried to long here, we would have got shut down quickly. That's the purpose of the stop loss. You put it outside the structure. So if the structure breaks and you're wrong, you know that the bigger idea, the bear flag's breaking down, and that's where you're going short. So it's going to be valid until it isn't, and you won't know until it's not valid, basically is what I'm trying to tell you. But that's how we're looking up to set up our positions there inside of the structure. So right now I'm going to be looking to take a couple questions from the comments, see where we're at in the comments, and then we'll come back and review some more structures and different scenarios and what they might look like. So we'll see who's following me here. What's up? What's up? Back in the comments now. Appreciate you, Gray, for giving us this info for free. I'm daily crypto, but yeah, no problem. Gray sanctioned it, so it's all good. We're glad to be here. And Perfect Mold says, does this only apply for BTC or also Forex trading? So, brother, this is applicable to any asset. Like I said, I have a couple different assets here, mainly crypto because I'm 100% crypto invested. But you can do this on Forex. You can do this on stocks. Anytime the candlesticks present this structure, it's only required that candlesticks present the structure. So there's different structures here that I'm not even showing you because they're irrelevant to today's discussion. But if you take a high point and a low point, like back over here, there's another wedge. We have a wedge right here. And last week is the session where we talked about wedges, So it's not dependent upon only Bitcoin or only the daily time frame. Like I said, you can do multiple time frames as well. The structure comes from the highs and lows creating a valid structure. Because sometimes, like if I go to where price is now and we just put some trend lines on here, we don't have valid structures. Okay, well, there's kind of a rising wedge. I'm trying to force that there. Here's a little bit of something and here's another little bit of something. But like none of this stuff, like internally, really adds up to a beautiful tradable moment, right? A beautiful tradable moment happens infrequently. And when you can observe it, like something like this is a beautiful tradable moment. And that's where you want to hunker down on your position. So being able to spot these is what's important. And yes, they're available everywhere. And Prefix says, I wish schools taught this. They do. It's called Crypto University. We teach this at Crypto University. So, basic schools want you to go out and be wages and stuff like that. Anyway, we're going to move forward now and look at a couple of bullish structures. So that's how we're breaking down the measurements here. I'm not going to be so precise or in depth on how we're moving forward now, but I'm just going to show you a couple different scenarios and examples. So all of them, let me get back to our illustration here. All of these structures right here, these four, that's how we're going to make use of them. So the bear flag and the bear pennant is going to be the same. It's just we're going to have a wedge on the pennant side. And on the flags, we'll go ahead and go look at some flags now. It's going to be the exact same, but opposite. So right here, we have a 15-minute flag. And this one is not like a very large one. Here, we had so much things to do inside of that structure. Here, I would not really try to short from the top. I'd only look to long from the bottom or at the breakout because this is a smaller structure. It's on the 15 minutes. And so in this scenario, our trade would probably look something like this, where we want to set up our long again. It's going to be at the bottom now because we're expecting a bullish break. Even if it was bearish, we want to long from the bottom and short from the top. Now, this is going to be bullish because it's a bull flag. However, again, I don't want to short from the top here because it's an aggressive slant. It's very small in percent. If we measure this, it's 0.27%. So this is a scalping opportunity. We would set up our risk to reward ratio somewhere along the bottom here and with a stop loss outside of that structure because there's not even another swing low here. And then our take profit right here up to this high. So if we would do something like that, this one would come to fruition and that'd be a quick 1.36. That's a day trade. This was a swing trade. If we're looking at setting up that super long, glorious 52%, and some people did trade that. Like I said, I have proof of this on my Twitter, timestamped. You can go look through my Twitter. I didn't pull up the tweet because, fuck, it's in 2022. But I have a screenshot of this as it's occurring, and I said bottom for BTC. So you can make those profits. And same thing if it's a small scalp like this, you can make those profits. We're trying to long from the bottom. Even if you miss longing from the bottom, you can see that on an aggressive candle that's breaking out, you can move your stop loss. So remember, we have prime entry, just like we had over here. We had prime entry 1, secondary delayed entry. Here we have prime entry 1, longing from the bottom, stop loss outside of the structure. And then secondary delayed entry as it's breaking out. As soon as that candle closed, for example, on this particular situation, if we were looking at this right here, you say, okay, this flag is broken up. So you can place your entry right there as soon as that candle closes. Stop loss below the recent low and outside of the structure in this case because it's so close. But normally, just inside of that structure is fine. And then whenever, you let it play out, boom, take profits filled. So looking at a couple other scenarios, here's Pyth. Here's a small little bull flag. And the bull flag actually kind of resembles it can resemble some other structures that we'll talk about in some other segments. We have the symmetrical triangle. So we literally see bullish continuation, the bullish variant, or the bearish variant, because sometimes it has a strong move, and that's what makes it a flag. Sometimes it doesn't have a strong move, and it's just a wedge or a price conflict. But in any case, I'm just showing you, how price can travel through. I spotted another 2 here. So in this case, we have a pennant and a flag happening 5 minutes, Pyth. These are scalpable trades. And, price then did whatever it was going to do. And then a couple more here on Rune. So we could see here different flags of different types. This one here is a really good example of a flag and pennant. Like I said, it should be a flag is going to be more parallel, and a pennant is going to have more of a wedge. And then coming to Rune, this right here doesn't exactly resemble a flag because it's not parallel, and they would eventually meet at some point. So that would be more of a wedge, even though they don't actually meet. I just didn't draw them out long enough. But, so different scenarios are going to be different. Not every flag is going to look picture perfect, and you're going to have to determine for yourself if it's something you want to trade. But, looking at longs again, just to finish up there, wow, I don't know why that came like that. Looking at these bullish structures, we want to try and set our entries somewhere right here at the bottom, prime entry 1. And if we miss that entry, because sometimes we see the development late, it's not our fault if we can't always get in at the prime entry. Sometimes we see the development late, but at the delayed breakout, that's where we can go as soon as it's breaking out. You can wait for a retest, or you can go in as soon as it breaks out, because it might not be a retest. There we go. All right, cool. I'm getting a call from Papa Gray. Looks like Papa Gray's trying to jump on the screen. That's going to conclude my presentation anyway, so let's welcome Gray onto the stream. What's up, Brother Gray?
Yo.
Teaching the guys about candlestick formations.
Can you hear me?
Yeah, we can hear you.
Okay.
Get my headset. I can't put my headset on because I got the crown on. I'm the king of crypto today, but we can hear you, boss.
Okay, cool. I'm getting a little bit of... Oh, never mind. Got it sorted. Yo, what's up, guys? What's going on? Gray to the B to the T to the C to the moon here. The young George Soros. And welcome to the live stream. I'm a little bit late. Edward, why did you confuse me so much? This stream was scheduled at 9:30 my time, PM. But you started at 9.
Well, that's what the Discord had said to start at. So I started when the Discord time said to start.
Oh my gosh.
If you go check the Discord recurring time was at it was 11 my time, so I jumped in when it said to jump in. I was like, okay, maybe Gray's busy. I'll do the show, no problem. We got to get these guys some education.
Okay, I see. Yeah, man. So you have covered your part. I would just come in here and do a little bit of what I promised these guys. I did promise a giveaway. And
you promised him a giveaway? How funny. I promised him a giveaway too. Looks like we got a bunch of shit to give away.
Exactly. So we can get into that, but overall the market looking good. Oh, by the way, some of these guys faded on my calls, especially on whiff. Now, I just came here to brag maybe, but I can show you guys what's happening exactly with the shitcoinery at the moment. Do you want to share them my screen? Here we go.
Yeah, I got it up.
Oh, so juicy, bro. 51K BTC. Who would have thought we up there? Dogecoin even is starting to move. But in the last 24 hours, stacks. $2.38. I told you so. Okay. And I do deserve a Valentine's flower from you guys. I helped so many of you to make money with all my calls. But the most important one is whiff. I've been telling you guys, whiff to the moon. This dog, this small little dog, is going to go to $1 very soon. And a lot of you guys faded. Okay. So let's find out how is whiff doing at the moment. Quickly. Okay. You see, even CoinGecko is hating. I'm trying to find whiff, but it's trying to block my blessing. What's
I was
going
about to
on?
say they don't want you to make money, bro. They're trying to block your blessings.
Man, that is really, really weird. And speaking of, I'm not going to Valentine. I canceled my Valentine's plans tonight because I'm hanging out with Dwayne Wade tonight. Can you believe it, Eddie?
Wow. Well,
Unbelievable, bro. I didn't know that I'm sharing the same hotel with Dwayne Wade. I mean, how beautiful is crypto?
Crypto's
Unbelievable.
very beautiful. I just hope your woman isn't too bummed. I mean, my girl, she'd bust my bippy if I canceled our plans tonight.
But she knows that, she knows that in 1 year, she's gonna be in Miami or in Hawaii on a villa that you own. So it's all good, man. So here's whiff. Can you guys believe it? 46 cents. It's going to be the first meme coin to hit $1. I told you so. And if you faded, 151% in the last 7 days alone. What more do you want to see? I mean, it is what it is, guys. But that is it. I did tell you, I taught everybody, and Welsh as well. So I see here SRK is telling us about Welsh. Okay. I don't know why my internet is tripping. Is it because I'm hanging out with Dwayne Wade or what?
And the king of crypto.
Everybody is hating. Yeah, guys. So, congratulations to everybody who's making money on STX. Some of you guys are following my trades on OKX, Spot. We're doing fantastic there on as well. So, you can't say that I didn't help you to make money, this year already. So let's look at Welsh. How is it doing? Is it another I told you so, or it's another oopsie?
Well, whenever you're spraying and praying, there's going to be some whoopsies.
Yeah, of course, right? Absolutely.
But
check it out. It's like having kids, bro. If you're going to have 20 kids, I mean, one of them might be Bill Gates, but you're definitely going to have another one. It's going to be another loser in there. So, you're spraying and praying. If you're spraying and praying, you got to pray that it's all good at the end. It's all Gucci, because it's more likely not going to be. But you know what? I think I have to reset my internet, or I need to call the hotel to fix it because it's kind of tripping. So what I will do, we can end off this stream, and in 30 minutes, I'll open up another stream that I can stay for like 2 hours or so, just kicking it with the guys, do the giveaway, and just for fun, Q&A and everything. And
sure thing, man. You hold your prize till later, but I did promise these guys if they stick around to this stream, we're going to give them a 2-week alpha pass. So,
wow.
Yeah, that's right. So, very first person to comment, I need you to comment these words exactly. Hope everyone's listening. First, because it's going to mark it. First comment that comes up, it says, Crypto University Alpha membership is the bomb to the moon. First person to type that gets a 2-week alpha pass. Let's go. Let's see it. Where's it coming from? Who's going to put it in there? Who's going to put it in the chat first? We got this giveaway going hot. Where is it? Nobody wants a 2-week alpha pass? What?
Yeah. Let's
Oh my
freaking
God, I
go.
can't believe the chat's not blowing up. There it is. Oh, Ryan Gabriel's.
Who got it? Who got it?
He's
Who got it?
All right, brother. Ryan Gabriel's got it. So if you don't mind, come into our Discord now. The link is in the description to join our Discord. I'll just make sure that you have it there. Let me
get it now, boys. Get it.
And I need you to open a ticket. Open a ticket for me, and I'll get you all set up. Where is the Discord? Hold on. This is tripping.
He doesn't know where the Discord is, or he's tripping.
Yeah. All right. Here we go. There we go. See you server invite. All right. Cool. I'm gonna get you the link to come to the server. Drop in the server, brother, and open a ticket. We have a channel there. It says get support. Open a ticket, and I'll help you out, Mr. Ryan Gabriels, to get you a 2-week alpha pass. Congratulations. Thanks everybody for coming out to this stream. Gray, you want anything? You got to say anything before we head out?
No, in 30 minutes, guys, I'm gonna go and do another stream. I just have to call the hotel for them to fix my internet is a little tripping, and then we go on for an hour of shit talk and trading and just having fun and giveaways. That's basically what we're gonna do.
All right.
So yeah, well, all good.
Thank y'all for coming out for the lesson. I really appreciate it. We'll continue the series later, and I'll teach y'all some more about price action analysis. If you want this, also today I'm giving away 20% on consultations with me. You don't have to book it today, but if you buy it today, you get 20% off. So share the love with your loved ones if y'all want to learn about crypto, and feel free to join the Discord anytime so you can get more lessons like this. See y'all later.
Let's go, guys. Okay. So again, I will be back here in 30 minutes, guys, with another stream, and it's gonna be fantastic. You don't want to miss on that one. You don't want to miss out. I'll see you.